Good evening, Sanbonani Dumelang. Welcome to episode 114 of the Private Property Podcast. I'm your host, Zama. It's a Wednesday, so as usual, we've got ABSA joining us this evening. And of course, we're going to be tackling something that I know a lot of us probably want to know a bit more about. We are, of course, go in the middle of a global pandemic. We are seeing that it has an economic effect on all our pockets. And we're certainly trying to find different ways that we can, stretch our rands as much as possible, find the different ways to access funds wherever we can, and of course, cut down on our expenses as much as we possibly can. And that's why this evening we're looking at accessing funds from your home loan. And I think this is one of those things that a lot of us who have home loan facilities probably want to get a better sense of. Maybe you don't want to access them right now, but you definitely want to find out how are you going to go about accessing them in the event that you have that rainy day. And to help us better understand how we can access some of that money, the implications of how we do it, how we can save, but also what it means. And this is one of those things that we've been speaking about, what it means when you talk about equity in your property portfolio, in your property. I know that this is that question we've been speaking about quite a little bit in the past 2 weeks, but we're now understanding it from a bank's perspective. And this evening, I'm joined by two ladies who are no strangers to the Private Property Podcast, and that is Kamini Ramsamy, who is the Head of Acquisitions and Pricing for ABSA Home Loans, as well as Portia Letlape, who's a Portfolio Manager for existing customers at ABSA Home Loans. Ladies, thank you so much for joining us.
Thank you, Zama. Good evening to you and the viewers. Thank you for having us.
And, I actually want to start with you, Kamini, because I think before we even look at the logistics of how you go about accessing some of this money, the various products that even ABSA, Home Loans has, and I know that different banks would have relatively similar, but we're obviously going to also look at some of the ones that ABSA specifically has, is perhaps let's understand what we mean when we say people can even access, some of their money when we speak about home loans in particular.
Correct, Zama. So a home loan can be an excellent source of funds, in certain situations, and it's also a very inexpensive way to borrow against to borrow a loan versus an unsecured loan where the interest rate is quite exorbitant. So if one needs additional cash, one can look at utilizing that against the home loan. So there are many ways that you can tap into your home loan. So let's talk about the consumer who prepays. So prepaying means the consumer contributes over and above his monthly contractual installment. So if that customer pays in addition to his monthly installment, that additional funds is stored in what we call a flexi reserve. That customer can then utilize that flexi reserve, and Portia will take you through just now in terms of how you can utilize that flexi reserve. Ultimately, a customer could prepay into his home loan because he wants to, pay down the home loan faster. He wants to not pay that much of interest to the bank. So let's take an example. You've got a home loan of 2 million Rand at prime over 20 years. Your monthly installment is roughly 15,500 Rand. Now let's take a customer who says, I don't want to maybe spend 1,000 Rand a month on a lavish dinner. Let me put that 1,000 Rand a month towards my home loan. So that customer essentially prepays 1,000 Rand into his home loan. Now, what you find is that home loan will be paid off a lot sooner. That customer will also save roughly 240,000 Rand worth of interest that customer will not be paying to the bank. That is quite a substantial amount. Secondly, you can access additional funds from your home loan by borrowing against your home loan. So by applying for a further loan or for a readvance.
And, I actually like that tip, Kamini, because it's always a thing that various guests have actually echoed here on the Private Property Podcast, is that when you're able to always put that little bit extra money into your home loan facility. If anything, that's the one place where it goes such a long way. So sometimes you often make the example of looking at an extra 500 rands and just paying, that extra 500 rands every month. Sometimes if, let's say, you get a bonus at work and you've got a little bit of extra funds, you're able to, prepay it into your home loan facility. And if anything, for viewers at home, they're really great calculators that we also have on private property. So you can go to privateproperty.co.za and play around with that calculator. So where you're able to see if you pay in, a little bit extra, let's say in the example that Kamini has given, perhaps there are now 15 years left on your home loan. Prime has gone down just a little bit. So now let's say your minimum payment is around 13,000, but suppose you keep it at that 15,000. So you keep it at the amount that it was before we had these decreases. You're able to see that if you continue paying, at that amount, maybe you'll shave off an extra year or an extra 18 months. So those little extra rands certainly do go a long way. But now, Portia, I know a lot of people know, a little bit about it, that access bond facility, because they talk a lot about it. A lot of people talk about, the advantages of having that access bond facility. Do people have to apply for it? And how exactly does that facility work? Because I think oftentimes people, even investors, will always say when you have a home loan facility, make sure you have an access bond, because there are different ways that you can play around with it. But when we talk about an access bond facility, what exactly is it?
Thank you, Zama. So the access bond, or what we call the flexi reserve facility within ABSA, allows you, as Kamini has mentioned, the ability to prepay money into your bond, right? So those additional amounts that you're paying over and above your minimum installment go into, let's call it like a savings pocket. But the benefit of it is that it helps you to save on interest rates. So your interest rate charges are calculated taking into account that those additional payments that you've made towards your bond. Customers do apply for it. They've got two options to apply. Either at application phase, when you apply for your home loan, you can tell the bank that you would like to have a flexi reserve facility made available to you. And secondly, you can also apply within the term of your loan as well.
And I think, if we look at then that facility, Portia, there are probably various ways that people are able to, utilize it. Can a person then capitalize that additional payment that they make in order to reduce their monthly payments? And how do they do that? Because I'm sure some people are probably thinking, maybe my minimum amount is 4,000. I want that to be slightly lower. Obviously, given that the interest rate, remains the same.
Yes. So you've got two options, right? So you can leave the money available to you. And if you've got an ABSA transactional account, you're able to withdraw it through your internet banking profile. You can transfer it from your home loan account into your transactional account instantaneously. Alternatively, if you don't have an ABSA account, you're going to have to go into a branch or phone a call center and have an EFT transfer done. However, with capitalization, what that then means is that the money is taken away from you in terms of you being able to withdraw the amount, take the amount out of your home loan. But the benefit of capitalizing is that we do a recalculation of your installment when you capitalize, and that will, in essence, also reduce your monthly installment over time.
And I've actually found that depending if you, for example, especially during this period, looking at having your monthly expenses go down as little as possible, or there's a particular threshold you don't want to exceed when it comes to your monthly expenses. And of course, a home loan amount does tend to vary. Capitalizing an amount does seem to typically work quite well when you want to just keep it as low as possible and just not have access to it. Because I think sometimes when we have access to money, you end up using it for all the wrong things. I mean, we're now in level 1, our borders are open. People are probably going to think, look, let me just leave the country a little bit. Whereas we've been here sitting still for the past, nearly 6 months and probably saving a little bit of extra money. So sometimes it does help to, channel those funds, capitalize them instead of accessing them every month and then essentially using them. Because I think a lot of us perhaps may not have the discipline that some people at home probably do. And of course, to viewers at home, I certainly want to hear from you around, the different ways you've been able to access funds in your home loan. Is there a way that you're already doing it right now? Because I know a lot of us sometimes when when we take those home loan facilities, we're probably not aware of the different ways that we can use a home loan facility, especially if I think about the first time you buy your home, you're probably so intimidated. There are already so many papers you had to sign that understanding what it actually means to have that home loan facility and the different ways that you're able to use them is probably something you're not even thinking about. So do share with us how you're using your home loan facility to either save money or also access it for that rainy day. Now, Portia, then when you look at people who, have those funds in that flexi reserve, are they able to, so you're saying that, you're mentioning earlier that you're able to withdraw those funds from the flexi reserve, but then what happens in the event where a person defaults? I mean, we are right now, unfortunately, in the middle of a crisis, and I know that ABSA has, provided relief for their customers, not just home loans, but across other products. But suppose a person does default on their home loan repayment, would then, the bank be accessing some of those funds that are in that fixed reserve?
Yes, Zama, absolutely. So because the funds are prepaid, meaning that you paid upfront, the bank is able to utilize those prepaid amounts to settle your monthly installment. So we'll take the amount, your monthly installment from your flexi reserve month on month until the flexi reserve runs down. Hopefully by then you've recovered and you'll be able to service your bond.
And I think, I'm thinking about, and we briefly were having this conversation off air, Portia, is that we are luckily, and I say luckily because I think a lot of us would probably want to find ourselves in that particular situation. But there are, of course, people who are now, finishing off their home loans. So they've probably, they're at the end of that 240 months. Perhaps they were smart enough to prepay a bit extra every month for whatever number of years. So maybe it went from 240 and now they ended up paying maybe only 200 months. And they're at the end of their term. What then happens to all those funds that they would have prepaid? And this is, of course, assuming that they didn't tap into them and dip into them and use them. What would then happen to those funds at the end of the term?
Yes, so Zama, what is required when you get to a zero balance on your home loan account or you reach end of term? It is expected of you as the home loan owner to come forward to the bank and request your title deeds. So if you've prepaid and you've paid sooner than the term of your loan, you need to approach your bank and ask them to give your title deeds to you. But there is a process that one needs to follow. The bank will appoint a cancellation attorney who will then cancel your bond with the deeds office, and your title deeds will be issued by the bank. There is an amount, obviously, that is payable to the bond attorneys to process the cancellation for you. But the good thing about it is that you are a proud homeowner, you've got your title deed, it's in your hands. Those lucky ones that are able to pay off their home loan before retirement.
And like I said, I think a lot of us probably want to find ourselves in those situations very early on and not have to wait until retirement before we actually get, the original copies of our title deeds. Because of course you are able to get that copy even after you get your property because the bank has the original. But I'm sure a lot of us have aspirations of, having that title deed in our ownership and owning that home. And I think the big thing to note there that Portia is mentioning is that there are those cancellation fees. And it's something, Portia, that we've actually spoken about on the Private Property Podcast, that oftentimes when we look at property transactions, certainly as buyers, we tend to look at, the transfer fees and the bond registration attorneys, as well as the transferring attorneys. But of course, at the end of the, the journey, or certainly when the seller is selling a bonded property, you also have those bond cancellation attorneys. So in the event where you're now at the end of your term, that's something that you should probably just budget for. The cost, depending obviously on how on the price of your house, typically isn't that large, but it's certainly something that I think as a personal home you need to be mindful of, and make sure, as Portia is saying, that you communicate with the bank as soon as possible, so that you're not kind of sitting and not having whether it's your title deed or that chapter of your life wrapped up. We're going to go for a quick break, and when we come back, I want us to look at that issue that I said we've been looking looking at for the past 2 weeks a little bit. And that's the issue of equity. You know, what exactly do we mean when we talk about, you know, equity in a home? Are there different ways that we're able to use that equity and leverage of the equity in our various properties? And we're also going to, you know, take your questions and comments at home. Bongani, I see your question. We're going to address it right after this. And of course, I want to hear from you at home. If you've ever accessed funds in your home loan facility, how was that experience like? You know, were you aware when you bought your property on the onset that you are able to use your home loan facility in these different ways? We often talk about, you know, how property investors try to have as many home loan facilities as they can, as young as possible, because there are all these creative ways that you're able to build wealth with a property portfolio if you're smart about it. We're also going to look at that particular one. How do we exactly go about building wealth using property? We're going to take a short break and we'll be back just after this. Welcome back to episode 114 of the Private Property Podcast. I'm your host, Zama Kumalo. It's an ABSA Wednesday here on the Private Property Podcast. And this evening, we're looking at something that all of us probably want to know a little bit about. And that is, of course, how you can access funds from your home loan facility. But before we get back to this evening's conversation, we are, of course, going to be having the first time home buyers show shortly after the show. I know we're usually on Friday. We're changing things up. And now going on from this evening, we're actually going to be having that show every Wednesday evening. So you can certainly catch Esti Claassen bringing you this evening's edition of the First Time Home Buyers Show. And she's going to be talking about 3 things I wish I knew before buying my first home. And her guest is going to be Tebogo Lehman, who is a property enthusiast as well as a sales and operations manager at GE Healthcare. And I'm sure that's one of the things that if you're a first-time home buyer, you certainly want to get a better sense of. So many of us make a lot of mistakes when we buy our first property. And there's just certain things we wish we knew before we signed on the dotted line. And that's certainly something that you can look forward to in this evening's conversation with Esti. So do stay tuned in after this podcast to make sure that you catch Esti for the First Time Home Buyers Show. But while to bring us back to this evening's conversation, I'm joined, of course, by Kamini Ramsamy, who is the Head of Acquisitions and Pricing for ABSA Home Loans, as well as Portia, who's a Portfolio Manager for existing customers at ABSA Home Loans. Now, ladies, before the break, one of the things I certainly want to look at, and Kamini, I'd like you to take this one, is this idea of equity in our home loans. We talk a lot about it. We've spoken about it here on the Private Property Podcast. But what exactly does it mean when we say that you've got equity in your home loan? Because I think we still kind of get confused with, that word, because it gets used in so many different contexts. But of course, it has a particular meaning when we're referring to our home loans and our home loans facilities.
Mrs. Zama, when we refer to equity in a home loan, this is essentially the difference between the outstanding amount you owe the bank versus the current market value of the property. So if the value of your property today is worth more than the amount that you owe the bank, we say you have a positive equity. So you essentially can then sell your property, settle your loan at the bank, and essentially have a bit more in terms of a deposit for a new, second property. So if you also have positive equity in your home loan, you could tap into this by potentially applying for a further loan on your home loans, applying for a further loan or a readvance as well.
And I actually like that you mentioned readvance, because we've been talking a lot about, the flexi reserve. And I'm sure that viewers at home are now thinking, okay, so what is this readvance? Because there might be viewers who do have a bit of equity in their home loans. So when we talk then about a readvance, and even I know that ABSA also has a further advance, what exactly are we talking about with those two specific products?
Okay, so essentially a readvance is you borrowing against your home loan. But a readvance is where you are borrowing an amount that takes your outstanding amount back to your original home loan. So let's illustrate this with an example. So say you took up a home loan of R1 million and it's 3 years down the line. And now the amount you owe the bank is 800,000. You essentially can apply for a readvance of 200,000 Rand to take your loan amount back to R1 million. So that's essentially a readvance. You have to go through a full application process. So undergo a full assessment. You'll have to be, reevaluated from an affordability perspective because your installments are going to be higher. Also note that you will be repriced. So we are looking at now the loan for the remaining term that is left on the from the existing home loan. With the readvance, it's very quick. There's no bond registration costs. There's no transfer fees. The bond amount essentially is the same. We talk about a further advance. A further advance is different from a readvance in that with a further advance, it is taking up, it's taking up a loan against your existing home loan, but you are taking up an amount up to the current market value of the home loan. So with a further advance, it does take a lot longer because there you are incurring bond registration costs and potentially transfer fees as well. So like with a readvance as well, a further advance, you have to go through a full application process, a full affordability assessment. We really look at you as a consumer on the credit bureau as well to see if you are, if you are suited for the further loan.
And I think, one of the big things, Kamini, as you're saying that, a part of me is also thinking it's so important to, for the viewers at home to also just do the mathematics of it, because as you're saying that you're already going to be incurring other costs from the bond registration, perhaps even transfer costs. So understanding what the full cost implications are essentially going to be and whether it's going to be worth you, taking that readvance or if it's rather better, to stay where you are because it's essentially going to be costing you so much more. So I think it's one of those big things because we sometimes forget to go back and run the numbers. I mean, I know sometimes when you do your budget, you want to just round off everything and not do everything to the T. And sometimes maybe you kind of round down certain numbers because you're thinking you don't want to get the shock of your life as you're doing your own individual balance sheet. But an exercise like this, and especially when you deal with home loans, really does require you to be very honest about your finances. And the easiest way to be honest about it is to literally take your bank statements. I mean, I would literally print out a 3-month or a 6-month bank statement and almost see the various line items, because I know banks will sometimes say, you must do your balance sheet. You want to just round it off, but no, actually sit down, take them out and be realistic about the state of your finances. Because if you're going to lie to yourself, the bank is going to find out. They will know the figures. So it almost doesn't help you at all if you're going to go about it that way. Well, of course, taking your questions and comments at home. We do want to hear about your experience of using, whether it is a flexi reserve or an access bond, but the various ways that you've been able to use your home loan facility to access some funds. I see Martha, one of our regular viewers, Martha Shingange, saying, all I can say is that another bank deprived me of this great opportunity. I only found out about this facility some 10 years after I had the bond. I'm coming over ABSA. So there you go. You've got a new client in Martha, because she certainly didn't know about this facility many years into having it, which is one of those unfortunate things, because the facilities are there, but oftentimes, first-time new buyers tend to not know about some of those things. And I think this is part of why the first-time home buyers show is so important, because it really is helping, viewers at home when they make some of these decisions when buying a home for the first time. And we've got Semi Mahlatse actually responding to Martha saying ABSA must make make you their brand ambassador, definitely coming over. Please talk to your people to give me a good rate. So there is somebody else who's also interested to coming over to the red side. So I do hope that the ABSA team will reach out to both of them on our social media platforms. We've got another one here from one of our regulars, Ubongs Sabakwena, who says, I have 2 excess bonds, one with Standard Bank and the other with ABSA. I have a bank account with Standard Bank so I can see and transact with my home loan online, but I don't have an account with ABSA, so I can't transact with that excess bond. Do I have to open an account then with ABSA for me to be able to take advantage of my flexi reserve? I'm reluctant to put money into the ABSA one because of this. The Standard Bank one is maxed out currently. Portia, perhaps you can take that question. So would they need to open a a check account in order to access their flexi reserve that they have with ABSA? And to be easily able to transact, essentially.
Yes, Zama. It's easier when you've got a transactional account with the bank, because then it's easier to transfer between your home loan and your transactional account using your internet banking profile. But that doesn't mean that you can't withdraw from your flexi reserve. So like in Bong's case, he doesn't have an account with us. He would come to one of our branches or phone our call center. He'll complete a form, and then an EFT transfer will be made to his other transaction account. But the easiest way is to open a transaction account, because having to wait for the money to clear, when the EFT is done, it takes a lot longer than just instantaneously doing the transfer yourself, and the effort is a lot more.
And it definitely is. I mean, I think we're living in that digital age where we are working on our banking apps. And so you certainly want to be able to easily transact instead of, going into a branch or calling a call center. So having that transactional account to be able to access the Flex Reserve will probably be the better option in terms of ease. And I've got another one here from Ubongani Mabunda, who asks, how often is a person allowed to withdraw from the Flexi Reserve?
So you are able to withdraw as often as you can from your Flexi Reserve. There are parameters that we have put in place in terms of your minimum amount that you can withdraw. So you can only withdraw a minimum of 1,000 Rand, but you can withdraw out of your Flexi as often as you can.
And we've got another question here from one of our viewers on YouTube. And this one is coming in from Usabelo Kwanyama, who asks, can I refinance my bond more than once? Kamini, let's give that one to you. So can a person refinance their bond more than once?
So we've never had that situation before. I think we've always had a person refinancing their bond once only. I think it very much depends on the term. So it depends on the original term that the customer has taken up. If the customer has taken up a term for, say, less than 20 years, then potentially the customer can look towards refinancing the bond more than once. But like I've said, it's very rare for us to get a case where a customer is refinancing their home loan more than once.
Mm. And, Kamini, I think one of the things that oftentimes as, homeowners, whether it's you've only bought your primary residence or you've, bought investment properties, and I know this is specifically true to people who've got investment units, is that we're always searching for the best rate, right? So especially right now, I think everybody is so conscious of, the interest rate. We're having so many questions around these historically low interest rates, and various people have said, call your bank up, see if you're able to renegotiate your interest rates. So there's quite a lot of awareness around the power of interest rates. So in the event where somebody does apply for a further advance or a re-advance, would they essentially be able to get better rates? I mean, you were saying earlier that it's a new process altogether. So are they able to, in that process, end up getting better rates?
When a person applies for a further advance or a re-advance, we do reprice the customer. So we do look at the whole loan in totality. And it obviously depends on a number of factors. So it depends on the customer's risk at that point in time. It depends on the amount that we're now financing. Remember, it's going to be the outstanding amount the customer owed plus this further loan amount. So we look at a couple of criteria there. We look at, specifically the risk of the customer. And based on that, we're able to price the customer. So the customer could potentially get a better rate, or you could actually get a worse off rate. So it all depends at that point in time with the various factors that we look at as a bank in terms of our pricing and what the customer could achieve.
You know, every time I speak to bankers, especially people who deal specifically with home loans, I'm always tempted to just ask them, how do I rig the system? I mean, how do I make sure that I get the lowest interest rates and always get 100% bond? And if I want to put in extra, I will put down that deposit, but I certainly want that 100% facility, because I think that's almost the utopia for so many people. You either want prime, but I know a lot of us would like a prime minus as much as possible. So it's almost if you could give me a template for, this is the template if you wanted, prime minus for a home loan facility and you wanted 100%, I would take it. And I know that those answers are never that black and white, unfortunately, because as bankers will tell you, I mean, they always say it will depend. There are various ways. They want to have a sit down with you and really look at your case on a case-by-case basis, which is, of course, unfortunate, because that means we can't have this one template that we can all use to rig the system and end up having our home loans at prime minus 1%, which I'm sure so many of us would probably love. Well, we've got another question here from one of our viewers on YouTube. This one, I'm going to give it to you, Portia. It's coming from Matumelo Muhaduba, who asks, how can you access the excess funds while those funds are counting towards making your home loan interest rate lower?
Yes, so you can access the funds. So remember, your interest rate is calculated monthly based on your outstanding balance. So if this month your outstanding balance was 800,000 because you had an additional 100,000 paid, prepaid, we will calculate your interest paid based on 800,000. If you withdraw that 100,000 and your outstanding balance goes up to 900,000, then your interest rate will be charged on the outstanding balance of 900,000.
And I think, if anything, it's one of those mathematics, right? Especially if you want to keep taking it and putting it back. I mean, I remember listening to a few property investors who say they know when banks will say doing their accounting. So they know when to transfer the money, take out the money, and almost try to rig the system. I mean, I don't know how effective that typically is, but I know that as property investors, you're always trying to find these different ways to kind of play around with the system as much as possible and move in funds so that you almost, get charged as less as possible throughout the months. Now, Kamini, I mean, we've been talking a little bit about, equity, what it is. Perhaps take us through maybe the pros and cons of accessing your equity, because I'm sure people at home are like, okay, so I know I've got it. What are the plus? I mean, the pluses of accessing it is you've now got this money, but what is the potential, downside? And to somebody who has it, maybe doesn't quite know what are creative ways they could potentially access it, or why it would be a plus for them to access it. Perhaps take us through the pros and cons of then accessing your equity.
So some of the pros are, one, obviously you're getting additional funds. Two, you're borrowing at a very inexpensive way. So obviously you're borrowing at a low interest rate. If you had to take an unsecured product, you would be charged a much higher interest rate over a shorter term. So the installment you pay there would be much higher versus what you're paying now on a further loan or a readvance. So those are definitely pros. In terms of the cons, obviously you're increasing your loan amount. So that is definitely a con. And the second one is, if you're looking at a further advance, you will have to pay now additional bond registration costs. You'll have to, you will incur transfer fees.
And I think that, and we're saying, earlier, Kamini, there's certainly a caveat to viewers at home that in the event that you do opt for those options, you're aware of the financial implications, and don't just think of you're going to access this money, but understanding that there are obviously, implications to accessing those funds. Now, Kamini, before we slowly wrap up, because I know that the First Time Home Buyer Show is going to be coming up shortly, and this one is actually for people who are first time home buyers, because I know there are people watching us slowly waiting for that First Time Home Buyer Show to come up shortly with SD. In the event where you are a first time home buyer, how do you then start using to slowly begin to build wealth?
Yeah. So being a first-time home buyer can be an exceptionally daunting process. Purchasing your first home. You're making that bold step but now you're going to be owning your first property. You want to know. So you want to know, firstly, can I afford this property? Will the bank approve my application? And what are all the hidden costs involved in this transaction? Not how much I'm going to be paying towards this home loan on a monthly basis, but what is the homeowner's insurance? What is the bond registration costs, the transfer fees, the advance, the advance rates and taxes, the advance levies, all those hidden costs that you'd want to know. You don't want to be surprised when you're in the transaction around these costs. So fortunately, when it comes to knowing your credit profile, the credit bureau does offer a free online credit report on an annual basis. So you can a credit report from any of the credit bureaus and have a look at your profile. It'll just give you an indicative view of how the banks would view you. You may also want to look at a pre-qualifying application process. So it's not a full application. It essentially just gives you an indication if you would pre-qualify for a certain loan amount. And just jot down all the costs that are associated with this transaction. Make sure that you are fully aware of these costs. And my advice for first-time buyers is, once you own a property, use every opportunity to prepay into that home loan. Prepay additional into that home loan. It doesn't have to be monthly. It doesn't have to be big amounts, but prepay something. It does go a long way.
And it goes such a long way. I think one of the things I did with the first properties coming in was, if let's say my minimum payment was 3,000, if you're not diligent enough to electronically move the money, you almost call your bank up and say, make it 3,200, for example, because you're saying doesn't matter what amount it is, so that minimum payment is now 3.2. In the event where interest rates go down, it stays that 3.2, so you're paying that little bit extra, and you almost don't think about it because in your budget that's paid for. You don't need to think about it at all. And of course, if you want to know more tips about navigating buying your first property, you can tune into the First Time Home Buyers Show hosted by Esti Klassen, and that will be coming up shortly right after the Private Property Podcast. But before we wrap up, one last question, and this one is for you, Portia. I mean, one of the big things that's also happening right now as people are getting more and more interested in property, and it's again because of these historically low interest rates, is they're asking whether or not a property portfolio is a good investment. I know that there are so many different takes to this one, but what would your take be if somebody's saying, Portia, is investing in property right now or a property portfolio, a good investment? What would you advise that person?
Zama, at ABSA, we always say, why rent when you can own? So especially for first-time home buyers, if you can afford it, you've done your calculations, you are able to afford a home loan, I say buy a home. A portfolio is also dependent on your individual circumstances. A lot of people are risk adverse. It's advisable that you speak to a financial advisor or a property finance specialist at the bank. Sit down with them, have a conversation with them, so they can also advise you on the different property classes, asset classes that you can invest in. But when you're a first-time home buyer, I would say go for it. If you can afford it, move from renting to buying.
And ladies, we are going to leave it there. Thank you so much for joining us.
Thank you.
Thank you, Zama.
And that is Portia Letlape, who's a portfolio manager for existing customers at ABSA Home Loans, as well as Kamini Ramsamy, who's the head of acquisitions and pricing for ABSA Home Loans. Well, that's an end of our show this evening on the Private Property Podcast. It has been a pleasure to be with you. And of course, if you're a first-time home buyer, you want to stay tuned to the First-Time Home Buyer Show, which is coming up shortly with Esther Klassen, where she'll be exploring something that a lot of us wish we knew. They're going to be looking at 3 things I wish I knew before I bought my first home. I think one of the things, as we've even said on this episode, is that buying that first home can be such an intimidating experience, that there's so many sometimes things that you can miss along the way. So you definitely want to know certain things from the get-go that will potentially not just save you money, but can also save you time, and where you feel as though you're making a very informed decision. So do stay tuned to the First Time Home Buyer Show that is coming up very shortly. That's it from me, Zama Khumalo. I'm back on your screens on Friday evening. Unfortunately, of course, tomorrow is going to be Heritage Day. We do hope that you're going to enjoy the day with your friends and family. And as usual, hoping that you're going to be staying home and staying safe. Good evening.
evening and welcome back to the First Time Home Buyer Show. I'm your host, Esty Klassen. Tonight we talk about what it's like to buy your first property as a family home. We talk about the 3 things we wish we knew before we either went into it, or if we're lucky enough, the 3 things we're lucky to know before we even go into buying property as our first family home. We have Tebogo Lehman with us this evening. Hi, Tebogo, how are you?
Hi, Esty. I'm good. How are you?
I'm very well. Thank you so much for joining us this evening. Tebogo has experienced it, she's lived it, she's gone through it. And tonight she's here with us to share some advice and tips on what we should think about just before we actually invest in property as a family home. So Tebogo, just before we start, maybe introduce yourself to the guests, how you actually started your property enthusiast journey.
Right. So I think first of all, I just want to say I've had a long day at work, thankfully back at the office now. So kind of transitioning into this new normal that we all talk about. So I've just come from work straight to the podcast and to join you guys. And I'm so excited to be joining this evening and just to share a bit of what my experience has been like buying my family home. And also hopefully, I'm hoping that the guests who are watching tonight can get some tips on what to do, what to avoid, and what to look out for when they are planning to buy their first family home. So a bit about myself. So I am a commercial leader and I am in the healthcare sector. I have been working in the sector for the past 11 years. And as part of my work, I mean, healthcare doesn't have much to do with property, but as a hobby and as an interest that I have, I'm very much interested in property development, particularly the design aspects of owning a new home and how do you kind of personalize that space to make it your own, and how do you configure it to make it more resonant with what you like, what are your interests, what are your needs, what are you looking to get out of the property. So this is an interest for me, and I'm really hoping that with the time that we have this evening, I can share a lot of my experience, but also some of my tips, as well as some of my preferences in how do I approach property design, and how do you choose like the ideal home for yourself based on your own needs. So I know we've got like a couple of minutes to get into it, and I'm so excited to get into it, Esty.
Thank you so much, Tebogo. Again, I know, things have eventually, we're at level 1, we've gone back to the norm, or what we think the norm is now. So thank you so much for, taking the time, joining us. And on this topic of, because you talk about that you say property, you're a property enthusiast, but it's a hobby of yours. And that's so amazing, because a lot of our viewers or people who aren't necessarily or don't call themselves property moguls or enthusiasts, it's also just a hobby for us. We want to make these big investments. We want to also try, but fear always gets in the way. And to speak to someone like you who's gone through it, lived these experiences, I'm so happy that you're with us to share this. So yeah. Just as you've, like you say, you're not necessarily in the property sector, what exactly inspired you to move in that way? Was it, in the past few weeks, we've been talking a lot about financial freedom, financial independence. What exactly inspired you to move in that direction of property becoming a hobby?
Yeah, look, I think when you get to a certain point in your life, you realize that, you're talking about financial freedom. And I think there's different ways to achieve that goal, because financial freedom as an endpoint is a goal, but there might be different avenues and different ways to reaching that goal. And for me, one of them was property ownership. And that's where I became very enthusiastic about knowing about the researching and investing in property. So, property enthusiasm for me is a great way to invest disposable income, or where you do have a little bit more flexibility with your income and you're thinking about ways of how can I use the money that I have instead of spending it? Because as you know, when you have some money, you know what's going to happen. You're going to find a reason to spend it. You're going to find something to do with it. So for me, it was really about, okay, when your earning potential grows and now you've got a bit of extra cash, let's say you get promoted, you get more income, or you start a side hustle, you start a business, or you start doing something that generates maybe other streams of income for you, or you've got a little bit more earnings than what you previously had when you started your career. And for me, what came first to mind was, hey, hang on, there's an asset that you invest in. It's something that it's a fixed asset. It's a property. You can do with it what you like over time. And it's an asset that in most markets, with some very few exceptions, will continually grow your investment base. So if you buy a property now and you sell it in 5 years' time, unless the markets have crashed, which is not something that we predict at this point in time, it's very likely, even if markets do crash, years later, markets do recover. And what inevitably will happen is you are going to get a return on your investment. So I thought to myself, great. I mean, come on, what greater way than to rather go shopping and buy the latest pair of shoes, Christian Louboutins or Jimmy Choos or whatever. And I thought to myself, well, there's other ways actually that I can take some of my finances and redirect them. And what better way than to invest them in something as solid as property? So this is how I became interested in researching and getting to know more about investing in property. And I started my journey a couple of years ago in looking into different property structures, different investments in property. And then, of course, a couple of years ago, I also went out looking for my family home, which I'll share a bit more detail and information about how my process, my thinking process was, my research process, my methodology, and let's say the mechanics of how I got to making the final decision of, okay, now this is the decision I'm going to make and this is the investment I'm going to make at this time.
Exactly. And I can't wait till we get actually, you know, to gain some of that knowledge so that we also know what to do going forward. And I like how you say, you know, you finally get something that you can own, which is very different. So when something's yours, and we spoke about this also a few weeks ago, and we spoke about a topic that which is called FIRE, you know, financial independence, retire early, about how sometimes we get financial triggers where we just want to spend our money on anything and everything that comes in our way. And like you said, the first thing you did when you got a little bit more money, you decided, you know what, let me invest it in my future, in something that I can gain from in the long run. And you're right, you know, property markets, the value either goes up and you, as you said, if it depreciates, eventually it does appreciate. And like you said, you're going to share a little bit more with us about how you actually decided on your first property and how you knew that this was the one. And this leads me to my next question. You know, we all want our first property as a family home. You want it to be your dream home. How did this first property stand out to you? How did you know this was the one for you?
Yeah, look, you know, I want to give you a scientific response and tell you, Esty, you know, if you have a spreadsheet that has these lines and you tick that box and you tick that box, which, to be honest, you have to. I mean, there's some sensibility that you have to apply, because investing in a property, this is at most a 20-year investment. So it's going to be a long relationship that you have with your home. So you want to make sure, it's almost like you're getting into a marriage where you think, well, I'm going to be with this person for the rest of my life. So I better make sure that this is right for me, this is right for them, and this is going to be long lasting. So you do have to have, let's say, the scientific structure and process of, what is my budget? Where do I want to live? What amenities do I want to have around me? What things are important for me at this stage of life that I'm in? What size of yard do I want? Must it be a standalone? Must it be in a complex? Must it be an apartment? There's all of those things, obviously, that go into the decision-making process when you buy property. But there is one thing which is non-technical and it's not scientific, and it's intuition. So for me personally, the home that I finally went for, I mean, I'd been searching for months, looking for, you know, where am I? What stage of life am I in? Do I want something small? Do I want big? Am I buying for now, for the future? And I'll go into a bit of detail about that. The concept of, you know, when you buy, do you consider buying for the now, or do you think about buying for the short term, or do you buy for long term? We'll get into that a bit later. But back to, what was it about me? I think it was just parking outside, getting inside the gate, and there was just that feeling of knowing this is it. This is the place that I actually want to take all of this money that I've saved up, because there's a huge amount of money that needs to be saved up front, depending on the value of the property, of course. But there's a huge amount that needs to be saved up front that you're going to use for things like transfer fees, for lawyer fees, moving fees even. I mean, most times we don't even think about, you need to cover the costs of moving from your old property to the new place. All of those things, new furniture, you're moving from a smaller place, you're now, you know, you might be moving from a 2-bedroom house and now it's a 3-4 bedroom house. You're going to need to fill up all of those new spaces that you've now acquired. But, you know, apart from the scientific methodological things that you kind of go through when you make that decision, there's sometimes that, and maybe it's 10% of the whole thing, that intuitive knowing that this is the place. You look outside, you get a feel for the neighborhood, you kind of intuit into it. And the minute you do that, you know, you're like, well, this is actually the space. You walk into it and you start, interestingly, I have to mention this because I did a major renovation project in 2017 when I moved into the new home, but walking into it, it was completely different from how it is now. But there was already like a vision, like, oh, I'm going to change this. Oh, I'm going to change this space. I'm going to move this. I'm going to change this room into this. I'm going to build a pantry. I'm going to create this. I'm going to do this. And already the minute that my mind started seeing this place, not as it was, but how I would want it, that was already for me a positive indicator that maybe this is the space that I want, because I'm already visioning how I am going to transform it. And some places, I can tell you this, and I viewed a number of properties, right? Online and in person. There are just some places you go and you're like, well, yeah, it's nice. Well, okay. Oh, well, yeah, that's cool. I think they've done nicely with the kitchen or whatever. But there's places where you go and something in you starts to change things around and you start to see the potential, right? You see that as it is today is not how you would have it tomorrow. That's a positive indicator to tell you, oh, maybe this is it. So yeah, do your research and do all that needs to be done as you prepare. However, there is going to be that intuitive knowing that that's my place.
Exactly. And I like how you said the intuitive, your intuition, use your gut feeling, because on numerous occasions, like you said, you know, technology's made it so easy for us. We can view property online, but you still always want to go check it out in person. And when you did that, like you said, you viewed numerous properties, but you just know there's that one property where you're like, no, this is the one. And I like how you said, you know, you already started seeing renovations in your head. You were like, okay, I already know what I can do. So you look at a place for what it could be that benefits you. And that's the importance of, and as the title says, a family home. You're not building this just for the now. You're not renovating it for other people to live in. It's for you. So that's so special. You know, take your, you know, and I know, like you say, it's only 10% because we do need to do the logistics of it. And I really want to go in depth on this logistics because I know we think that maybe everyone knows. And this, again, my next question is, what is it that, like, or some questions that you asked yourself just before you went to maybe view the property or just before you knew that this was your family home? So some of the questions you asked yourself, and yes, this might be the scientific kind of description of it, but if intuition is 10%, scientifically 90% is the important parts of it. You know, we need to see if everything works correctly. We're not going to invest in a family home that's maybe, you know, breaking in the next 10 years. So the home has left you before you've even finished paying off your bond. So these are the scientific things that we need to look and list. So maybe some questions that you asked yourself just before you knew this was the one.
Yeah. Look, you know, one of the common things about buying property that people would hear, and it's kind of become like a, let's say, a generic statement or a term that everybody throws around is location, location, location. And I do think it's quite important. However, you know, I think the idea or the concept about location has evolved quite a bit over the years because property buyers, I think the profile of who can or who has access to capital to buy a property has changed quite dramatically. So location is a subjective thing. It's really dependent. It's dependent on your needs. So location, if you're buying a family home, for sure, you're going to be looking at from a location standpoint alone. So if you use location as a measure to consider that, okay, I'm looking for a place where I can raise kids, for example, you're obviously going to look at places where there's schools around, there's maybe parks around. You're going to look at, I mean, all of us look at safety, even if you don't have kids, but safety is an important aspect to look at. Location plays right into the safety question as well. You know, there's a whole lot of things, but location is definitely something to consider. But I don't think there's one generic answer to what is the right location to have your home at, because I think this is dependent. Where do you work? Joburg is, or Gauteng rather, as a province even, is huge. I mean, even within Joburg, you can easily move 40 km from one place to another within Joburg. So you might be working in Pretoria. You want to buy a property in the south of Johannesburg. You have to consider those things, and you might be thinking, well, I'm going to be living here and working here, and every day I have a 2-hour commute to work and 2 hours back. Does it make sense? Am I going to have a major career change that means I might move closer to where I live? Closer to where I work rather, or whatever the case might be. So location is important, but I think location as a standalone concept is not useful more than it is looking at what are my needs? What am I looking for in the location? What neighboring suburbs do I need around me? So if you are, for example, somebody who likes to dine out, and this was me, by the way, because I used to live a little bit on the outskirts, not so far out, but a little bit far out from, let's say, all the vibey dining places. And I love good food and good wine, and I like going out and having a good meal. And what it meant was, every other night, it would be an hour to go to, the center or the central, where you would find a lot of places for dining out. At the time, no young children, so no need for schools and things like that. However, for the future, I knew that's going to be a need. So location for me now, I needed to think about, I need a place where I can serve my needs, in terms of I need a space where it's safe, but I can reach the places that I like to access on a regular basis, say more than once a week. Secondly, I want to have kids in the near future. So I need a space where there are good schools around in the vicinity of the area. There's no way I want to drive an hour to drop my child off at school and then drive an hour to work. It just doesn't make sense. And this is a place I'm buying for long term. So I may as well think about, how does it serve my needs and the intents and purposes of me accessing all that I need to kind of live life, you know what I mean, as it were. So things like, where in Joburg do you want to live? Joburg is big. There are so many suburbs. There's low density areas. There's high density areas. There's areas in terms of demographics where there's on average more younger people. If you think about an area like Melville, for example, there's areas like Midrand, for example, where there's a growing young middle class group of professionals. There's other old areas where you'll find a little bit more the geriatric community, or maybe a transition where younger families are now starting to move in. So you have to think about location from that perspective. You have to think about what other areas are surrounding, what sort of areas would you like surrounding you? What things do you want to have access to? And obviously, I mean, living in South Africa, safety is an important thing. I suppose anyone who buys a property thinks about safety. And safety, it's not just about the area, but it's about, do I want to live in a standalone house where there's an additional financial investment, or at least the thought around, how do I secure my home? But if I'm in a complex, that is outsourced in a sense to somebody else that takes care of the safety of, all the properties in that space. Or, if it's a townhouse, or if it's an upstairs apartment, or I prefer ground, or I want a garden. So these were, at least some of the things that I was thinking about, like, okay, so for me, I want family home, because that's what I'm looking for. So the end game is family home. That's the goal. I want to access restaurants. I want to access work, which is in the northern suburbs. I need schools for the future. I need to be able to be close to the airport, because my work requires me to travel quite a bit. So I need a place where I can access at least a highway to get to the airport, because that's a regular for me on a weekly basis. So these were the things. However, even if you're not buying a family home, these are definitely questions that you work through and you think about, what are my needs? And I think if there's anything that whoever that's watching, if you're going to forget everything that we've said and you need to remember one thing, you really have to be clear, like, about what are your needs. And when I talk about needs, you have to do at least a 5-year assessment. So we're talking about short to mid-term. You're thinking, in the next 5 years, how do I see my life? What have I planned to materialize in the next 5 years? And then you buy with that goal in mind. And then if you're really smart, you think, okay, even beyond 5 years, where do I see myself? What do I want to do? Maybe I'll sell that property and upgrade. However, don't buy just for right now, buy for at least in 5 years, this is how I see this property and this space serving my needs. Yeah.
Exactly, because I think, because, you know, life is so unpredictable. So to have a 5-year goal in mind and just to go forward with like what, and, you know, like you said, if you're planning to have kids in the next 5 years, then be close to a school. You were traveling almost an hour to be closer to amenities that you preferred. And at the end of the day, those costs all add up to what you could have used to pay off your bond. You know, so if we just become realistic about certain things and have enough to actually own or to start building our or investing in our family home, then do so. So we're quickly going to run to an ad break. And in this ad break, because when I come back, I'd like to ask you, Tebogo, what was your why? You know, in the past few weeks, we've been talking a lot about why are you investing? What was your why to your family home and to your dream home? So to the viewers at home, please comment, let us know, what is your why for investing in property in the future? Or if you have, what was your why? We'd love to hear from you, and we'll read the comments at the end of the show or closer to the end. So stay tuned. We'll be back with Tebogo Lehman. Thank you. Good evening and welcome back. I hope to the viewers at home that you've commented. Let us know why you've invested in property in the past or why you're about to invest in property in the future. We'd love to know. We're back with Tebogo Lehman, and we're going to find out why Tebogo invested in property. Why exactly? What was your why? You know, in the past few weeks, we've spoken to rental agents, to people who have been in the industry for years. And one important thing that I still take with me today, every time I finish a podcast, is someone said to me, know your why. And it sits really, you know, it sits with me. So I'd love to know your why, Tebogo. Please share with us. What is your why for investing in your dream home and your family home?
Yeah, look, I mean, apart from avoiding being homeless, which is, that's an obvious why.
Right.
Look, you know what? One of my biggest whys was I had been renting for a number of years before I decided to make the big leap of faith and jump and invest in property. And, you know, after some time of renting, I mean, look, don't get me wrong. I think there's a fit for everything, depending on where you are and what your income is and what your financial goals are and what your future plans are. However, for me, I'd realized that I'd spending quite a bit of money in renting. And when I looked at the spaces that I'd now been able to afford renting, it was huge rentals. And I thought to myself, hang on a second, instead of paying somebody's bond off, and I know it sounds so generic because everybody thinks that when they buy a home, and I'll tell you what the caveat is to that. However, at that point, I'd reached a point where I said, well, I can actually afford to own a home. And instead of taking the money, the disposable income, and disposing it and paying, you know, for a rental, I may actually rather just invest that in a home, right? So that was at least the overarching and kind of the underlying why for me, as to, you know, you've got this income, you have these plans for the future. Why not reach a nice alignment where there are means to do it, and then you also have the needs that you want to meet with a family home? So it was a nice alignment and a nice match for me. And one of the most important criteria for me was really buying for the near future. So I also thought, well, I don't want to buy an apartment. And that was a need for me because I knew that in a couple of years, I have these plans that I've put in place. So I needed to look at buying a property, not just for now and for the future. And what's interesting is what has materialized over the years is how the property has almost taken a life of its own, because there's been sub-projects apart from the initial renovation of customizing it to being more me and making it more my home as opposed to the previous owner's house. there's been other projects and some very interesting spin-offs that are actually financial gains as well. Things that, to be honest, I hadn't seen at the time that I made the choice, but I'm glad that buying with at least a future goal in mind has actually helped spin off other streams of income from the very same space. And I'm paying the same bond, but there's other things that are now generating income out of the very same space. And I think it just really, it's a case of thinking about investing and thinking about future financial independence and thinking about what is it that I can do at this point in my life with the access to capital that I have. So that was my big why. And yeah, I want to have little ones running around.
Exactly. So when you started your first investment, you already knew, like the advice that you've given us, you took it upon yourself to know your 5-year plan, to know exactly why you're investing in your family home. We have one comment from Phyllis Jordan, who says, my why is definitely generational wealth, building a portfolio and making money and retiring early. So you see how all our whys sort of start to connect to one another. We all really want financial independence, and not necessarily to retire early, but really just to leave a legacy, to leave something for those who come after us. And for, like you said in the beginning, ownership is so important to a lot of us, and to have something that is truly yours is so profound and rewarding at the end of the day. But I'm sure that, like, when you went through your process, because there's a difference between renting and obviously buying a home as your family home. When you're buying a home as your family home, the money is automatically going into property tax. You don't. So a lot of people avoid doing that, or their fear of doing it is because it's going straight into your own home, and you're like, so they feel like, they're losing out somewhat. So how beneficial is it to buy your first home as your family home rather than a property that you're going to rent out, maybe? Because when you buy your family home or your first home as a family home, you feel like you're not making that generational wealth, or you feel like you're not getting an income because your income is going straight into your property. So how beneficial is it to actually have your first investment be a family home rather than a rental?
Okay. Again, I think it depends. I mean, for somebody who, say, for example, let me try and find a scenario that would fit. For somebody, let's say, who is single, that maybe travels extensively, is hardly ever using their space for anything else, but they want to make that investment into a fixed asset, then probably for them buying an apartment or something to rent out and churn some income might make sense. But remember, in terms of the economics of it, whatever income you're churning, a portion of it goes back to paying the bond, because you're not buying it cash, right? You're taking mortgage essentially. So you also have to think of it from, you have to do your maths and realize that if you're buying something to rent out, you have to pay the bond. You still, as the owner of that property, liable for the upkeep and maintenance, even if somebody else is using it for, you sign a lease of 2-3 years, whatever, 1, 2, 3 years, whatever the case might be. You are still responsible for the levies, and if it's a freestanding house, the rates and taxes, the upkeep, any major construction or infrastructure investments or repairs or anything like that need to be done, that's still your responsibility. So in as much as you might be generating some income from the rental that you're getting, you have all these liabilities still, paying the bank and paying whatever else that may come along the way. So you have to have kind of a contingent budget outside of still honoring your bond payments from the mortgage that you've taken out with the bank. What I love about having bought a family home is the fact that in as much as there isn't income coming out of rent, so it's my money going to service my mortgage and my bond, I can do with it what I like. So, and to be more specific and maybe helpful for some people out there, buying, depending where you buy, but in my case, having bought a standalone home that you can literally, I mean, it's unswitched. You can convert and transform it to anything. There's a cottage that I have, which came with the house, and all I did 3 years ago was renovate the cottage, and now I have a tenant, and that's generating income. Of course, it's not enough to pay off for the whole property, but it's income that I otherwise would not have had, and I'm still living in the same space where I enjoy the size of the yard. I have a garden, which I enjoy. quite a bit. I've got a pet. When I've got family, or I want to host anything, or I've got whatever that I want to do, I do. In fact, I was going to leave this for later, but I may as well just throw it in there. But interestingly, one project that I've just completed doing is converting one portion of the house into a flatlet. And that flatlet is comprised of a bedroom, full ensuite bathroom, and a kitchen and lounge space. And I'm putting that on Airbnb. Guess what? Hello, additional income. And I still get to live on the same property. So I've got this space, which is for the future. And while, I work towards that space being used by myself for my future needs, I can convert it, because it's my own space, it's my house. I'm now converting it to other ways of generating income. Like I've got the cottage, and now I'm going to have the Airbnb functional from beginning of October. So this for me is linking to needs, but I see the benefits of not just buying for the now. And you really have to be resolute in how you do the economics. Because I think some people think, well, I'll buy something and rent it out. Yeah, but you're not getting all that rent for yourself. So you
because
really
of the maintenance, and everything that you mentioned. And I think what's so rewarding, or to some people, when you're renting out properties, that things come, when it clicks at the end of the month, you're like, oh, okay, cool, got an extra check. But in actual fact, the maintenance and the work that you have to do towards the rental, it all sometimes takes all of that money. And it's so amazing that what you're doing with something that you can call your family home, what you've done is, you've expanded. So you're getting an extra income. And that's some advice to some people, it's not bad at all to buy your first property as a family home, and then try and maybe build on, maybe outside, or add a cottage, and try and use this to generate more income. And like we were talking about earlier, generational wealth. Just before we end off, we've got some questions here. This is again from Phyllis Jordan. What's more beneficial, buying or building? I think this can be our personal opinion, but for you, Teboho, what do you think is more beneficial?
I'm going to answer that with some limitations in my experience on building. But I do have a bit of experience in having done a major renovation project, which cost quite a lot of money. It may as well have been actually building a new home. Like everything, say it depends. If building is a full-on project, so if you have worked in projects and you understand the intricacies of setting up a construction project, there's a whole how do I explain it? There's a whole project plan with milestones, with budget considerations, with timelines, there's a whole thing that you need to think about. A building project, I think if you want to build a good property, if you're thinking, for example, Phyllis, if you're thinking about generational wealth, you don't want to build a house that's going to be built in 2 weeks and it's done. You want to give it time. So let's take, for example, say it takes you 6 months to build the home of your dreams, right? And I'm talking from scratch. You have to find a piece of land in the place that you want. And as you know, with piece of land, you're going to be restricted in terms of where you find pieces of land that are sellable, that you can actually put money to. You cannot just go and say, well, I want to live in Sandton and there's a piece of land that I want to buy. It doesn't work like that. You're going to have to find developers that are selling land, portions of land, and that you can purchase. Then you have to think about, okay, then I need to get a contractor, and then I need to work on a project plan, and then I need to work on the scope of the project. And then there are a lot of details that go into building your own home. What I do think is quite rewarding about building your own home is you basically take your dream of the kind of space that you want to live and you translate that as is almost. You have a vision, you sketch it out with an architect and you say, I want to have a double-story house and the ground floor must be, the general entertainment area and the living spaces, and upstairs must be bedrooms, and I want all of them to be ensuite. You can do this because you are basically taking a blank canvas and you are building from scratch. It gives you a lot of freedom to recreate what you want. For sure, there are some cons that you need to consider when you're going to take this. If you have the time, if you have a little bit of expertise, or you can outsource that expertise, you have to think about the intricacies of dealing with different contractors, because you may have your contractors, but there's other stuff that comes into play. Contractors, design, architecture, things, plans and things that need to be submitted to the municipality for approval. There are really a number of factors that you need to consider if you want to go that route. But for sure, if you have that time and you have some cash lying around, and remember, buying land, there's different financing mechanisms about buying off plan or buying land and then investing in that, as opposed to getting a bond. Where I have a house, you go to the banks and you tell them, I want to buy this house. I need whatever, 500,000, 1 million, 5 million, whatever the case, whatever your figure is, right? It's totally a different ball game. So you need to consider where you are, what you have at your disposal. If you have the time and money, go for it. Benefits of buying a house, straightforward, you get a mortgage and then you reconfigure the house. But the negative though about buying a freestanding house, if you are buying, say for example, you invest in a house for however many millions, and you're buying a house where there are some structural issues that you may not necessarily pick up at the time that you are viewing and making that decision. Guess what? What inevitably happens a couple of months down the line, a wall cracks, something falls apart. Okay, I'm being dramatic and extreme, but one portion of your house is now left bare and open, and the previous owner is not liable. It's your house now. So you now have to sort that out. However, there are also, let's say, things that one can do to avoid that. You can get someone to evaluate the property. People that are trained in that can get your own architect or somebody to come and check the structure and whatever, but you're buying somebody's space. This is a space that somebody, however many years ago, conceptualized. I mean, I can tell you a bit about my house. It was built, in fact, I have the original plans, which is amazing, in 1953.
Oh, wow.
I think before many of us probably that are here were born, right? So it was built in 1953. I have the original plans. I have the plans when the previous owners did renovations and added new structures that had to be approved by the municipality, etc. And I'm buying into an existing structure. The beauty about it is that even in an existing structure, you can still reconfigure a home, which I've done. So if the previous owner came, they wouldn't recognize it because, hello, now it's Tebogo's house. It's different.
Exactly.
It's now, I've changed it both structurally and in terms of my preference for design and, my own furniture and things like that to be my own space, right? However, to do that, you need money beyond your bond. So think about it. You're now buying in your house. You've paid for your transfer fees and your lawyer fees. You've now taken this bond. You need to have funds to renovate. But the beauty about renovations is you don't have to do it immediately. I mean, you can wait. You can live in a place for a year. I think that's what I did. I lived in my house for 1 year as it was while working towards renovating it and personalizing it and customizing it. And up to now, I mean, owning a house, it's like, I used to hear people say this, and to be honest, I never knew what it felt like until I experienced it. Owning a house is like an ongoing project because there's always going to be something you want to change. There's always going to be a wall that needs to be repainted. There's always going to be new architectural or design ideas that come to the fore, and you're thinking, oh, now there's accent walls and there's feature walls and there's this, and oh, maybe now I want a new kitchen. Oh, now there's screed flooring. Now we don't do tiles anymore. We screed. Now I want to go screed. Oh no, when screed gets out of fashion, there's going to be something else. So the idea is that owning a home, you just have to know at the back of your mind, there'll always be something that you can change. You want to remove carpets. You want to have wooden floors. No, you don't like wooden. You want laminate flooring. No, now you want to have a different kind of ceiling, or you want this, or you want that. It's an evolving project. It's like it really, really takes a life of its own. And to tell you the truth, what I do love about this family home concept is that you can go wild with it. You can go crazy. You can do so much with the family home because you have the space. You have the space.
Exactly.
Yeah.
And it's so, like you were saying, because it's your own home, because you invested in a family home, you're not rushing to renovate for anyone else. It's not a rental. You don't have tenants waiting to be like, can you fix this, please, quickly come. No, it's your home. You do it at your time. And you also use the best people possible for these jobs, or for these, because a lot of people, they take the easy way out. They take the cheap way out. They want to quickly do it because tenants are complaining. But in your case, when it's your home, you're like, no, let me do this properly. And I also like what you said about style and interior design and things changing and evolving as we move on. We were talking about this actually today, about how you could do something or invest in a certain, I don't know, couch. And in 6 months, you're like, no, my style has changed. I actually want leather now. And in your own place, you can do this. If you have the funds, you can just, evolve and move with the times. And it's all to your preference because it's your own home. And just because of time, Tebogo, I know, we spoke heavily about all of this and we went in depth. So I hope that, a lot of the viewers could take a lot from this. Why rather do a family home? Why invest in a family home as your first home? And also the pros and the cons that come with it. You've told us about your fears. You've also briefly mentioned about, be aware of the cost that comes with this, your transfer, your hidden cost, your transfer cost. And we'll talk about that more in depth, maybe in a show to come. But just to leave us off with, is there any advice, for us as first-time home buyers that you can leave us with, just to go into the future, some advice just for us as we go on our journeys to becoming property enthusiasts just like you?
Yeah, look, by the way, I mean, it's been great chatting. I know we didn't even get through all the stuff that we wanted to go. So let's make a date, Esti, between you and I think this is going to be, we're going to have a sequel. We have to have a follow-up.
No, we have to.
We need another show just to go through some of the other detail, because I think there's a lot of nice things that we can share. And, my philosophy is to be as practical as possible in most and all things. So I think my advice is, do your research. I mean, first of all, be very clear and be kind of resolute and uncompromising on where you are at. What are your needs? Because we don't all want the same things at the same time in life. I mean, if I'm a 20-year-old and I have the ability, or I'm 25 and I have the ability to own a home, I may not be thinking about a family in 2, 3, 5 years. But if I'm 35, that's a totally different ballgame. So I think there's no generic answer except to say, make sure that you sit down and think about what are your short-term goals. And by short to mid-term, I'm talking about that 5 year. Let's say 5 years, the golden number, right? We work on 5 and we say, in 5 years, where do I see my life? What would I be doing in 5 years? And I think it's important. If you have ambition, you would be thinking about what you're going to be doing in 5 years, right? Where you want to be in 5 years, even if it's just a plan, even if it's just still a concept and you don't have all the details of it, but at least you have an idea. And then when you've done that, do your research. Okay. Do your research about the options that we've spoken about. We spoke about buying land. So understand the intricacies, because why that's important as well is because things change as well. Like in terms of regulations, things change. In terms of financial regulations and how banks finance different things, what might have been relevant 5 years ago may not necessarily be the case now. So do your research and understand what are the pros and cons. I mean, should I go buy a piece of land and build, and how much would that cost me? And within that, you build contingency, and you're like, well, if I get figure 500,000 Rand as to build, that's what it's going to cost. You add in at least 20% buffer as well. Actually, in reality, I'm going to go above that figure by 20%. Do I have /income/fund saved monies to cater for some of the contingencies and things that may come up while I'm working on this project? Or do I rather not want the stress of building, the timeline that goes with building, and just go for, find a board that says for sale, and I find a place that I like in a suburb that I like, and just go and purchase, right? So do your research, talk to people. I think a show like what we're having today is quite useful and very helpful for viewers out there, because I think it talks to people that have walked the journey. And I share a lot of what my personal experience is. It may not be applicable to everybody, but there might be somebody, and there may be many other people out there and thinking, yeah, I've been thinking about this concept of buying for the future, but I'm not sure if it's worth, spending a lot more in terms of my bond, and maybe, would it be a benefit? Can I even use the space later, or would it just be locking my cash, which is important to have also, into this big property investment. And here I am having done it, and I'm saying, yes, it worked for me and it's great. And I think if you have the means, go for it. However, for somebody else, it might not be the best option to go for. So, know where you're at, make sure you've done your research, talk to people, tune into these types of shows, get that information, and then ask as many questions, And I think that's something that we don't always do, especially like when you're doing something that's exciting for you and that's important. We just kind of want to go and make the decision like, oh, I want to do this, I want to do this. Ask questions and take time to assess, okay, now the answers that I have, are those in line with my needs, where I'm at, what I'm looking for, and what I want to achieve? And secondly, be realistic. You might want something that you're not ready for, and that's okay. Be realistic that, okay, maybe I want this, but maybe where I'm at, I should rather go for this. Or maybe I'm shooting low. Maybe I should be going up there. Be realistic about where you're at, and then make a decision at some point, having done the research and having done the talks and asked the questions. But one of the things is that I know we're a little bit over time now. There's no rush. There will always be a property that will speak to you or that will respond.
I was literally, because I resonated so much with what you said. And I was literally going to say that a lot of us, when we go through this process, we like, no, this is the one, I have to take it. And you go through so much trauma or so much trying to afford this thing. And you're like, but no, next week or next month, something else could come that literally suits all your needs and your 5-year goal and all the amenities, the location, everything. So I was literally going to close with that, but carry on.
It can change. I'll tell you a story. So before buying the property that I eventually did, I made an offer for another property. And that was it. I was like, this is it. It's like, oh, that moment where I'm like, that's it. And I made an offer, and there were other people that were making an offer for that same property, and it was rejected. And I remember I was so bummed because I thought to myself, come on, after all the search, after the spreadsheet with all the priorities and the criteria and all the things that I'm looking for, I've now found the place, and the seller rejected my offer and they accepted somebody else who had a bigger deposit. By the way, deposit is very helpful. It does give you leverage if you have it. If you don't, that's fine. That's also okay. But if you do have a deposit, that's great. So save money, right? Save. Anyway, and I was bummed. And what I did, I took time off because it was too overwhelming. It was too emotional. It was too distressing. I took time off. I took a couple of weeks off. I said, you know what? I'm going to wait. I've done research. Given up a lot of Sundays to go to property viewings. Took time off. Couple of weeks later, when I've recouped and I've re-energized, I came back again into searching, and then I found the home that I eventually bought. And to tell you now, in hindsight and in retrospect, I look back and I think I couldn't have chosen better. In fact, I'm glad. You know how it is where you think, well, actually, I'm glad it didn't work out because I love so much the one that I eventually went for. Mm-hmm. So don't be too pressured to make a decision too quickly. This is a big decision. And even if you have made it and something happens or the bank rejects you or something comes up, it's okay. Sometimes when that happens, it actually works out to your benefit. So take your time, enjoy the process, enjoy the ride.
Exactly. There you have it. Take your time, enjoy the process, enjoy the ride. There's no rush to any of this, Investing in property is really a big step that we have to take. And to become a property enthusiast, this takes years, Tebogo learned, the hard way, went through and experienced everything by herself. And today she's here giving us the best advice. And I think, like you said earlier, I think if we take the process and do things ourselves, we learn, we love, and we continue. We just continue to invest in property, and don't beat yourself up if this is not the perfect house, because your perfect house will come along in the near future. Tebogo, thank you so much for this evening. I really enjoyed my time with you, and thank you for giving us advice and, being so open and honest about it. This is what we need. We need honest and open advice. So thank you so much. I hope to see you again soon.
Thank you, Esther. I'm waiting for that invitation for the date. So I'm really looking forward to the follow-up, and then we can go through some of the other details and some of the questions for your viewers. But thank you. This was really great. And I hope it's been helpful.
Yeah, thank you so much, Tebogo. I'm sure it has been helpful to our viewers. We got some comments, we got some other questions. If you'd like to see them, please do continue to comment. Let us know, even tomorrow when you feel ready, let us know your why so that we too can learn from you as our viewers. Thank you so much. We'll see you again next week, Wednesday, 7:45 at the First Time Homebuyer Show. Have a good Heritage Day.
Hi, I'm Cornita Bobs. I'm a BCom student at Stellenbosch University. I currently live in Valkefontein Estate and I absolutely love this area. Historically, Stellenbosch is known as a student town. It offers an incredibly peaceful lifestyle and the people around town are always welcoming and friendly. Because it's a small town, there's an amazing community vibe with some really authentic coffee shops and restaurants. The trees along Victoria Street create a beautiful environment to be in, and it's really cool for students passing through campus. There's some excellent boys and girls schools in the area. Our town has such a rich history, but at the same time it's really modern, and you'll find some amazing art installations all around. The sunrises and sunsets are some of the best in the world. It's the most beautiful place to call home. I've lived here for the past 5 years, and it's been an unforgettable experience. And this is my neighborhood.